Good morning, students. I wish you all a very happy new year. How are you all? Hope you all are fine at this new year and you might have completed your exam well, accountancy exam. I will correct the papers and we will see the marks, how many you have got. Okay, that I will tell you. Now we are going to start the next lesson, the 13th lesson. Okay, that is related to the 12th lesson, the final accounts. Final accounts, we have already learnt the final accounts, but here with adjustments we are going to learn final accounts with adjustments. Okay, we know the final accounts are the trading and profit and loss account and balance sheet, the financial statements. They are called the final accounts. Now they say that statement, it can be prepared in the statement form also, sheet. Okay, statement form or account form, that's final accounts. Financial statement, in statement wise also we can prepare the final accounts. So now there are 15 adjustments. So first we should see the purpose why we have to make adjustments for the final accounts. Why? Because some expenses and some income have to be paid or have to be received. Okay, because in the trading account and profit and loss account we are entering the expenses and the income, isn't it? Because there is one concept, there is one that accounting system, that all the expenses must be matched with all the income of that particular year. Okay, only then we could calculate the exact profit of that year. But some expenses we may pay in advance. Okay, or we may have to pay in some expenses, that means the outstanding we have not yet paid. Okay, so the some expenses we might have paid in advance, or some expenses that we have to pay still. Okay, so some that expenses must be matched, because those expenses are related to that accounting period. So those expenses must be adjusted. Okay, so we have to we have to enter all the expenses and income that is related to that particular accounting period, accounting year. Okay, all the expenses and all the income related to that accounting year must be entered. But in the previous chapter, what is given in the trial balance only we will post, isn't it? We will post them in the trading account and profit and loss account and balance sheet. We will find out the gross profit, net profit and the financial statement, the balance sheet. But here we have to make some adjustment. For example, depreciation. So depreciation is a loss, isn't it? That expenses we have never paid. So it is only an adjustment. So this depreciation must be charged under the profit and loss account. Okay, so we have to make some adjusting entries for making entry in the final accounts. So because these are not included in the trial balance. Okay, not included in the trial balance, so we need to make some journal entries. They are called the adjusting entries. So we have to prepare the adjusting entries and we have to post these adjusting entries to the final accounts in the financial statements. Okay, So now what is the adjusting entry? So first we should know the meaning of the adjusting entry. These entries are prepared at the end of the accounting period. Okay, because some of the items have not been entered in the trial balance. So the items which are not entered in the trial balance, we have to prepare the adjusting entries in order to make some adjustments in the final accounts. So for example, if we need to pay some amount as salary, okay, we have not paid, because usually the business organizations may pay the salary on the first of next month for their salary of the current month. At the end they may not pay 31st or 30th. In the next month only they will pay. But that if we close the accounts on March 31st, but the actual salary will be paid on 1st April. Okay, so but here the salary up to March 31st we have to include, because the salary of March must be included. But when we pay actually the next month, April, next day, that means the next month. But in the books of accounts, in the trading account or profit and loss account, we are supposed to show that salary related to that month, and that month is included in that financial year. Here that April to March, isn't it? That is 1 year. So all the expenses related to these 12 months must be included in that trading account. So since we have not paid this salary of March on 31st, we cannot enter, isn't it? But it will not be, it is not entered anywhere, so it will not appear in the trial balance. So since it was not appearing in the trial balance, we have to make the adjusting entry. Okay, that we will learn one by one all the entries. Now why? What is the purpose we are preparing these adjusting entries? Why we prepare? Because there is a concept, that matching concept. All the expenses must be matched with the income. That is the main purpose. Okay, then we prepare the two statements, financial statements. One is that profit statement. Okay, that performance of the organization, that is profit and loss account. Okay, so that account shows the profitability. So that profit must be true and fair. It must be true and it must be fair. Okay, so the profit, in order to show the true and fair profitability and true and fair financial position of the business. Okay, in order to show the true and fair view of the financial position and the profitability of the concern, we should make the adjusting entries. Okay, then why we have to, that what is the need? Why? Okay, why we need to make the adjusting entries? Because we have studied that some entries are not entered in the trial balance. So okay, what and all have been omitted in the trial balance, in order to bring them into accounts, we have to prepare the adjusting entries. Okay, that is the first need. Then if there is that many items are there, that is closing stock, then outstanding expenses, outstanding expenses, then prepaid expenses, then accrued income but not received. Okay, income earned but not received, or income received in advance. some income we may receive in advance. To make adjustments related to all these adjustments. Okay. Then sometimes they may do some reserves and provision for bad and doubtful debts, or we may write off some of the bad debts. Okay, so reserves and for provisions we need to make these adjusting entries. Okay, so it is very essential that we have to make the adjustment. There itself in the lesson, in the previous lesson, there was only the one item was given outside the trial balance. Usually these adjustments will be given outside the trial balance as additional information. Okay, outside the trial balance as additional information. Okay, the number one, the main one is the closing stock. We have learned this one already, but we are going to learn only the journal entries, because without closing stock we were not able to do the we cannot prepare the trading account. That's why they have given already the closing stock in the adjustment. Okay, so we have done, but we have not studied clearly. Now in this lesson we are going to learn this. I have reminded you already, and I will teach you in detail the closing stock, as that is the first adjustments, isn't it? So now here the adjustments, additional information, there are 15 additional information. Okay, but those 15 they will never give you for the exam purpose. They may give 3 or 4 adjustments, or 4, or at the maximum 5. Okay, so among these 15 they will ask any 3 or 4 or maybe 2, as per their wish they will ask. Okay, so you each and every adjustment you should know first entry, then adjusting entry, and sometimes some items have another entry, transfer entry. Okay, at least one entry or 2 entries. Then how these adjustments will appear in the financial statements, into final accounts. That final accounts are 2, isn't it? Profit and loss account or trading account and balance sheet. So this one will appear in 2 places. You should remember all the adjustments will appear in 2 places except one. Okay. 2 places means one place will be the account. Okay. Which account? Either trading account or profit and loss account. Okay, 1. Then what is the second place? It will appear in the balance sheet. Okay, all these adjustments, either it will be in the trading account if that expenses is the direct expense, it will appear in the trading account. If that expense is that indirect expense, that will appear in the profit and loss account. Then another place it will appear in the balance sheet. So this is that rule. All the adjustments items will appear in 2 places. One place will be in trading account or profit and loss account. So the other place is in balance sheet. Okay, here only one exemption is there. Only one item will appear only in that, also 2 places, but in only one place. 2 places in same account, that means in the balance sheet, that we will learn the last item. Okay, so up to that all these 14 items will appear in 2 places. Okay, this either in trading account or profit and loss account and in balance sheet. Okay, now we will learn the closing stock. You know what is closing stock? Closing stock means the stock available in the store without selling. Okay, that after production they may keep in the store. That means the unsold stock. Okay, what is not sold, that we can call them unsold stock, or stock in trade. stock in trade. New terms they may give. Okay, that we may not confuse with. Okay, unsold stock or stock in trade, closing stock, all this means the same. Okay, so here we know that one, isn't it? That at the end of the accounting period, that means on 31st December or 31st March, what is the stock that remains without sold? Okay, that is called closing stock. Here, that one more rule you have to remember, we have to value the closing stock. How they will value the closing stock? Here, it will be valued at cost price or market price, whichever is less. Okay, which is less we have to value. Here, this market price is now named as net realizable value. Net realizable value. What is the meaning? Net realizable value. That means we have to, how much amount we can sell these goods. That closing stock. How much we can sell that, and they have to reduce the selling cost also. Any expenses related to selling of those stock must be reduced from the amount that is realizable, that can be received. Okay, so they will, that is called net realizable value, or in short we have studied as market price. Okay, cost price means what is the cost to produce that goods, and this one market price, that means the net realizable value that can be received by selling those goods, that estimate only. Okay, just they will have an estimate with the current market price. Okay, they will estimate, okay, this much amount we can sell. For example, here 100 units of unsold stock, 10,000 is the cost, so 15,000 they can sell. Okay, then the any selling expenses, carriage outward or to sell them, any amount, okay, that will be deducted. Okay, it will cost around 1,000, so 14,000 is the net realizable value, in which amount will be entered for the closing stock. Here we have to enter only the 10,000, because the expected loss only will be considered, expected profit will not be considered. Okay, so that is another concept. Okay, so they will this one you have to learn. Okay, how they will value the closing stock. They will value the closing stock cost at cost price or market price, whichever is less. Which price is less only we have to consider. Okay, in that price only we have to value the closing stock. Now we will learn the adjusting entries. Entry, you know, to prepare how many 5 columns will be there, isn't it? Date, particulars, then LF, debit, credit, isn't it? Then adjusting entry. Here closing stock, the date column we will leave simply, isn't it? Closing stock or stock in trade. Closing stock account data 2, we are going to credit this stock to the trading account. So trading account must be credited. Okay, so you have to write the narration. Closing stock brought into account. Okay, brought into account. Then we have to write the amount here. Okay, only one adjusting entry. See, closing stock is an asset, so we have debited this. We are going to credit the trading account. Okay, because we are in the credit side only we will enter. We will post this one where? In the trading account by closing stock. Okay, so closing stock is brought into account since it is the stock and asset, current asset, isn't it? It is debited. Trading account is credited because we will enter this one in the trading account. Then where it will appear? Okay, that means the presentation in the final accounts. Presentation in final accounts. Each one you should understand clearly. Okay, they may ask in some problem, they will ask only the adjusting entries. 5 items they will give, they will ask you to write the adjusting entries. Okay, so you should know what is the adjusting entry for closing stock account data to trading account, 1 mark. Okay, then presentation in final accounts, where it will appear. It is very clear, it will appear in the trading account. Okay, in trading account, where it will appear in the trading account. Credit side it will appear. Okay, then in the balance sheet on the asset side. Okay, we have already done the problem, isn't it? Many problems we have done, so you know that how it will appear in the final accounts. I will show the example in the given in the book also to you. Okay, how it will appear. Example, the value of closing stock shown on adjustments on 31st March 2016 is rupees 10,000. The adjusting entry is, okay, adjusting entry, stock in trade or closing stock, whatever it is we can write. Okay, to trading account. Date also given. Okay, closing stock brought into account, amount written. Then final accounts, how it will appear. Trading account, that we underwrite the heading. Okay, for the year ended 31st March 2016 by closing stock. Only one item, so you write. Then in the balance sheet, asset side, stock in trade or closing stock. Any one word you can write. Okay. Then sometimes in some problems, still now they have not given, but in some problems they may give in the, they will give us adjusted purchases account. Adjusted purchases account. I think we have done problem. Okay, in the 12th lesson. Adjusted purchases account and closing stock will be given in the trial balance. In the trial balance it will be given. Okay, if they have given this one in the trial balance, this adjusted purchases account, where it will appear in the trading account. In the trading account to adjusted purchases account, we will write the amount. Okay, then this closing stock, since it is given in the trial balance, it will appear only in one place. So where this will appear? In the balance sheet. asset side. Okay, assets. Closing stock. Okay, here the closing stock will not appear in two places. If it is given in the trial balance, it will appear only in the balance sheet. Okay, and adjusted purchases account will appear in the trading account. Here we should not write by closing stock because this is called opening stock, add purchases, less closing stock. Okay, we did I think one or two problems. Okay, with adjusted purchases. Adjusted purchases account means opening stock, add purchases minus closing stock. Okay, so it will appear here. Then here we will write the sales. Okay, no closing stock. Understood? Now I think it is clear for you the first adjustment, closing stock. Then the expenses, 4 expenses. Now, 2 expenses, 2 income. We will learn in tomorrow's class. Okay, outstanding expense and prepaid expense. Then two items related to income. Income received in advance and income accrued but not yet received. Okay, these 4 related to expense and income we will learn in tomorrow's class. Okay, students, thank you very much, and you try to understand and read the problems. Okay, thank you very much.